Gold has long been a sign of wealth and rank, connected with everything opulent from jewelry to sports vehicles and even fine cuisines. It is one of the most popular and significant commodities on the market right now. Because gold is both a commodity and a currency, some investors will maintain it only as a financial asset, while others will keep it in jewelry form, so that it can be appreciated while still serving as a means of storing money. It is a fascinating resource. It has been around for a long time, demonstrating that the strength of what it's been and how it has influenced the market. Gold is one of the world's largest financial assets, with an average daily trading volume of $183 billion. Its value has risen dramatically in recent years. When adjusted for inflation, gold was only $460 at the start of the 2000s. By August 2021, the price of gold has risen to almost $1,800 per ounce. But not all investors are enamored with the precious metal. Warren Buffett has expressed his skepticism on multiple occasions, describing it as an asset with no utility. We'll find out how valuable gold is a financial asset in this video. But first, please accept my warmest greetings if this is your first visit to our Smart Stocks Academy channel. To be the first to know when a new video like this is released, hit the like button, subscribe, and click the notification bell next to it. Now, let's get to the video. For investors, gold is a tempting asset. It's been around long enough to seem trustworthy, durable enough to be kept for a long time, and rare enough to be considered valuable. It has a greater range of real-world applications than other precious metals, ensuring a steady demand for the metal. When we look at the demand breakdown, we can see that the jewelry sector consumes the majority of gold demand, followed by the investment sector, which consumes around a third or 40% of gold demand. However, when we look at the technological component, it usually is around 10% and a little less. The demand for gold is also influenced by central banks and financial entities. Central banks had more than 35,000 metric tons of gold in 2021, over a sixth of all gold ever mined. The International Monetary Fund has approximately 2,800 metric tons of gold worth $158.5 billion. So as we've seen in recent years, central bank buying has increased with purchases exceeding 650 tons in 2018, indicating that the desire to buy gold remains strong. Yes, there have been times when central banks have reduced their gold holdings, but overall, central bank gold holdings have now reached their greatest level since 1999. Many investors choose gold as a risk diversifier because the commodity is proven to maintain its value over time. Throughout history, gold has been prized for its capacity to protect investors from market fluctuations. For example, the Great Inflation in the 1970s. Between the 1970s and 1979, the United States had one of the highest rates of inflation in modern history. From 1973 to 1979, gold returned an incredible 35%, a huge gain when compared to any other commodity. The dollar and gold had an inverse relationship. So, as the value of the dollar depreciates, gold often moves in the opposite direction. So it moves positively in situations like that. Because it's not as susceptible to inflation, it does not lose its value as other assets do. And that is generally why investors invest in gold from a macro perspective. The same can be said about deflation. During times of economic or financial crisis, gold is the most sought-after commodity. Following the Great Recession, gold's value skyrocketed from roughly $1,100 per ounce to around $1,900 per ounce, adjusted for inflation, between 2008 and 2012. During the 2020 recession brought on by the pandemic, gold prices soared to an all-time high of $2,021 per ounce overnight, eventually settling above $2,000 for the first time in August 2021. If you go back at the last 5 major market corrections, such as the tech bubble, the global financial crisis, and the COVID collapse of 2020, you will see that the SP 500 was down around 28% on average, while gold was up about 11% on average. It is because gold has demonstrated its worth as a liquid asset, one that can be used to fulfill margin calls elsewhere while still maintaining its value. However, whether gold is good enough for hedging is a hot topic among specialists. Gold's link to inflation has been found to be quite low in recent studies. In general, it has produced mixed results for investors during periods of high inflation, implying that purchasing gold to hedge may be more of a risk than a safe bet. While gold investors profited handsomely between 1973 and 1979, they lost 10% on average from 1980 to 1984, when annual inflation was 6.5%, and another 7.6% from 1988 to 1991, when inflation was roughly 4.6%. Gold as a long-term investment falls short of equities and bonds in terms of returns. Since 2011, the SP 500 has returned 14.55% on annualized basis. For the same time period, the annualized return on a 10-year Treasury note was only 2.57%. Gold, on the other hand, had a 10-year annualized return of negative 0.05%. Other commodities such as cryptocurrencies and even silver have risen in popularity in recent years, posing a threat to gold's dominance in today's economy. However, whether it will be successful in overturning gold is a completely different issue. If you're searching for a commodity that provides some macro exposure while also providing a bigger commodity exposure when it comes to industrial applications, investors may pick silver. However, if you're searching for a commodity or investment that's more sensitive to the macro climate, gold is a popular choice. I think there is a lot of discussion now about digital assets being regarded as stored value, whereas gold has traditionally been regarded as such. We believe gold prices will remain elevated compared to prices seen over the past 5 to 10 years, and that we may see another move higher in gold prices thereafter. But we also believe that there is more upside risk in the near term, and that we are likely to see gold prices begin to trend lower towards the end of next year. So do you believe gold is a smart investment? And if so, when? Please share your thoughts in the comments down below. And with that, today's video comes to an end. If you haven't already, hit the like button below to show your love and support for this video. Also, subscribe to the channel by clicking the subscribe button below and turning on the notification bell next to it to be the first to know when a new video is posted. Thank you for stopping by to watch, and we hope you had a great time. We hope to see you again on our next video.